Importance of setting financial goals and how to set it. Majority of us spend 80% of our life in accumulating wealth, and strive to save for our retirement with the desire to live the remaining life peacefully. Question is, will you really be able to enjoy the wealth you have accumulated all your life when you are over 60 years of age? Simple answer is, no. What's the point of all the accumulated wealth when you can't enjoy it with your family at the peak of your youth? At the peak of your youth? Is it possible? Yes, possible. This is where financial goals become a necessity, not only to keep your life financially stable but also help to enjoy the fruits of your hard work when you can actually cherish it. Financial goals helps you to live without the fear of uncertainties and enables you to make smart decisions when planning your future. Don't panic, we are here to guide you how to buy a house or your dream car without putting a dent on your savings. We will review: what are financial goals? This will help us understand the financial goals better. That will lead to the importance of setting financial goals. Why it is important to set financial goals in life. We will next move to the types of financial goals like short-term, medium-term and long-term goals. Before how to set financial goals, we will learn how to assess your current financial situation. This assessment will help you to understand your financials in depth before start investing. We will next learn about how to set financial goals with applicable examples to understand better. How to be smart and follow the SMART technique to set financial goals. Wait till the end of the video to get some bonus coverage on the financial goal setting advantages, tips and FAQs. Popping in your mind after watching this video content. Let's dive into our first topic to understand. What are financial goals? Financial goals refer to the specific objectives individuals or households set for their financial future. These goals are targets or aspirations that involve managing money effectively to achieve desired outcomes. Financial goals provide a clear sense of direction and purpose, helping individuals make informed financial choices and allocate resources effectively. To make it clear, financial goals can encompass various aspects of personal finance, including saving, investing, debt management, retirement planning, purchasing assets, and more. As we understood what are financial goals, now, let's move on to the importance of setting financial goals. Setting financial goals provides clarity and direction to your financial journey. It allows you to stay focused, make informed decisions, and resist the temptation of impulsive spending. Moreover, financial goals help create a sense of purpose and motivation, driving you towards better financial habits and long-term financial stability. In essence, setting financial goals empowers you to take control of your financial future. It transforms vague aspirations into concrete plans, helps you make informed decisions, and provides a framework for achieving the lifestyle and security you desire. Whether small or ambitious, financial goals are instrumental in your journey toward lasting financial well-being. Simple and clear, right? Now, let's dive into the topic. Types of financial goals. On first, short-term financial goals. Goals that you are aiming to achieve within a relatively short period, typically within a year or less. Examples of such short-term financial goals are building an emergency fund, paying off small debts, or saving for a vacation. On second, we have mid-term financial goals. Those goals have a time frame of 1 to 5 years will fall in this category. These goals may involve saving for a down payment on a house, funding higher education, or purchasing a car. Third and final category is long-term financial goals. These goals are those you set for more extended periods, usually 5 years or more. These may include planning for retirement, paying off a mortgage, or achieving financial independence. Before moving on to how to set goals realistically, let's review the important task of assess your current financial situation. It's essential to evaluate your current financial status. Determine your income, expenses, debts, and savings. Understanding where you stand financially will help you set realistic and achievable goals. Let's deep dive with an example to understand better on assess your current financial situation, with the help of Mr. John and Mr. Alex. See Mr. John, who's earning an income of 50,000 Indian rupees per month. During his early days of career, without any proper guidance, he fall into a trap. Based on his salary, his account holding bank had provided a pre-approved car loan of 15 Indian rupees lakhs. Without thinking of necessity or luxury, John accepted the car loan offer and bought a car. Later, John realizes the reality of easy monthly installment (EMI). John has to pay roughly 27,000 Indian rupees per month towards EMI for 6 years. This is more than 50% of his monthly earnings. He will be having his other expenditures and wouldn't have left much anything to save and plan for his future because of the trap he accepted. Even though he will be able to pay his debt and manage his living expenses, he is missing out his early investments compounding gains. Now let's see the same age, fresh earning grad, Mr. Alex, who also earning 50,000 Indian rupees per month. Even though his bank offered a pre-approved loan, Mr. Alex is clever in rejecting those unnecessary luxuries. Post his expenditure, every month he is able to save 25,000 Indian rupees per month. He financially stands tall to set his financial goals to achieve financial freedom. The ideology here is not only about the amount you are trying to save, to invest every month, but the discipline shown to achieve financial freedom. How you are preparing yourself to start the investment journey. Keep the below thumb rule ticked before moving into the art of investing. 1. Understand your goals. 2. Establish a budget. 3. Create an emergency fund. 4. Properly manage your debts. 5. Calculate your risk tolerance. 6. Seek professional advice. Hope now all of us are clear with assessing your current financial situations. Keep watching, as we will unveil the bonus at the end of this video, which will assist you to assess your current financial situation. Yes, you can assess yourself. It's a mighty $50 worth of bonus we are giving away for free. So continue watching. Let's set our stage to the most anticipated topic, how to set financial goals. Let us be smart and follow the simple and easiest SMART technique to set our financial goals. The SMART technique is a powerful method in helping you to outline your financial objectives effectively. SMART word stands for specific, measurable, achievable, relevant, and time-bound. By applying this technique, you can create a clear roadmap towards your financial dreams and aspirations. Let's explore each of the techniques in detail now. Step 1. Specific. The first step in setting SMART financial goals is to make them specific. Clarity is the key when you are preparing a plan to achieve a financial goal. Clearly articulate what you want to achieve, why it's important, and the steps you need to take to reach your target. Vague goals are difficult to work towards, so ensure your objectives are crystal clear. Therefore, while setting any financial goal, you should ask yourself 3 questions. How much do I need? That is, the exact amount. In how much time? Do I want to achieve it? How do I want to achieve it? That is, the method. Example for specific. Instead of setting a general goal, like save more money, make it specific by saying, save $5,000 over the next 12 months to build an emergency fund. Now, let's move to Step 2, measurable. Financial goals are usually long-term, and we tend to distract from them due to short-term gratifications. Putting a self-imposed deadline will keep you in check and will ensure you remain financially disciplined. However, it's important that you remain realistic and don't get too hard on yourself. Unrealistic deadlines will put a tremendous psychological pressure on you and eventually will fail. A deadline should be decided that balances your lifestyle expenses and ensures you don't get sidetracked. Example for measurable: if your goal is to pay off credit card debt, specify the amount you want to eliminate, say $3,000, and track your progress monthly. Next, Step 3, achievable. Ensure that your financial goals are realistic and attainable based on your current financial situation. Consider your income, expenses, and other financial obligations when setting your objectives. This is where assess your current financial situation comes into picture. If you could have assessed your financial situation earlier, during the planning stage, you can set an achievable target. Example for achievable: if your monthly income is $3,000, setting a goal to save $2,500 every month might not be achievable. Instead, set a more realistic and achievable goal, like saving $500 per month. Let's proceed to Step 4, Relevant. Your financial goals should align with your overall financial plan and life objectives. They should be relevant to your long-term financial well-being. Setting thoughtful and defined financial goals will help you make informed decisions based on your present income and financial abilities. Example for relevant: if you're planning to buy a new car in the next 2 years, setting a goal to save for a down payment is relevant to your overall financial plan. Last and final, Step 5, Time-bound. Setting a specific timeline for achieving your financial goals adds a sense of urgency and helps you stay focused and disciplined. Example for time-bound: rather than saying, "I want to invest for retirement someday," set a time-bound goal like, "I will contribute $500 to my retirement account every month for the next 30 years." Let us understand our SMART technique discussion practically via an adventurous way of smart investing. Meet Sam, an enthusiastic and adventurous man with a passion for exploring the world. Sam has always dreamed of embarking on a whirlwind journey across continents, experiencing different cultures, tasting exotic cuisines, and creating lifelong memories. This dream is the foundation of his financial goal, the Adventure Fund. Yes, it's quite different from the regular emergency fund, dream house fund, child education fund, exotic vacation fund, retirement fund, etc. Financial goal depends on individual needs, and to achieve the goals, the steps are same. So, for fun and our understanding, let's dive into this Adventure Fund. How to define this Adventure Fund? Sam's Adventure Fund is a financial goal he set for himself with a clear purpose: to fund his dream globetrotting adventure. The Adventure Fund is more than just a savings account, it's a dedicated fund designed to make his dream a reality. Now, how to make the goal smarter? Sam's Adventure Fund aligns perfectly with the SMART criteria. Let's see, one by one. Is the goal specific? Sam's goal is precisely defined: to save $10,000 for his epic adventure within the next 2 years. Is it measurable? The progress towards his goal is easily measurable. He can track his savings each month and monitor his fund's growth. Does the goal achievable? Sam has calculated his income, expenses, and projected savings. Saving $10,000 in 2 years is both realistic and attainable for him. Does it make relevant? The Adventure Fund is highly relevant to Sam's life and values, reflecting his deep desire for exploration and cultural immersion. Is the goal time-bound? Sam has set a clear time frame of 2 years to achieve his goal, creating a sense of urgency and focus. Now, let's see how practically the journey towards the Adventure Fund. Sam embarks on his journey towards the Adventure Fund with determination and enthusiasm. He adopts savvy money management strategies to accelerate his savings, such as cooking at home, cutting unnecessary expenses, and setting up automatic transfers to his Adventure Fund account. As time passes, Sam sees his Adventure Fund steadily growing. Each contribution brings him closer to his dream of traversing through bustling markets, scaling breathtaking mountains, and soaking up sunsets on far-off shores. To encourage himself, Sam follows, celebrating the milestones. Throughout his savings journey, Sam celebrates milestones: each $1,000 saved, each achievement of financial discipline, and each successful budgeting month. He rewards himself with small treat of what he likes the most, a day trip to a nearby destination. These celebrations reinforce his commitment and make the journey enjoyable. Here comes the ultimate adventure. Finally, after 2 years of diligent saving and planning, Sam's Adventure Fund reaches $10,000, his target amount. With an infectious smile and a heart full of excitement, he books his flights, maps out his itinerary, and sets off on the adventure of a lifetime. The Adventure Fund has transformed from a financial goal into a remarkable life experience. So, in a nutshell, financial goals, like Sam's Adventure Fund, are not merely numbers on paper, they are the blueprints to achieving dreams. Whether it's funding a dream vacation, buying a home, or securing a comfortable retirement, setting clear and vibrant financial goals empowers individuals to turn aspirations into reality. By embracing the power of financial goals, you can embark on your own inspiring journey towards a brighter and more fulfilling financial future. Now, to our worthy bonus part, where you can do much more with the shared Google Sheet. This will help you to assess your current financial situation. Every month, you shall do the budgeting and track your income, expenses, payments, assets, liabilities, and your total net worth. This will help you all to assess your financial situation better and plan. Just access the Google Sheet by clicking the link shared in the comment section, pinned post. Once you click, page will appear like this. Please make a copy with your Google account, which will enable you to edit and save the sheet in your own Google Drive. Go through the Read Me tab and understand where and what to enter, so you can track your personal finance properly. In the Read Me tab, Getting Started section, you can change the currency of your money, and also on the year, for tracking. Read Me tab will have instruction for each tab in the Google Sheet. Please read before start working on your personal finance tracker. If you need a separate video on how to make use of this personal finance tracker, please let me know in comments. So we'll go through in detail of the Google Sheet shared in the upcoming video. Please spend some time in a week to track your personal finance, as it will bring a discipline to your personal finance. If you feel any other questions to be addressed with regards to the financial goal setting, please keep posted in the comments to get it addressed in the best possible way we can. Please also consider to consult an authorized financial consultant advisor to get an opinion for your needs. My purpose is to educate the awareness towards achieving financial freedom. We are winding up and understood it's quite a lengthy discussion, but hope you all love the video. For any suggestions, please always do comment. As usual, if you like the video, please do a like and share with your financial aspirant friends and family members. Do subscribe for more such contents. See you in another video. Till then, happy investing.